Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hi. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey, Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. On each show we aim to answer as many of your most burning questions, that's investing or trading questions, including an opinion on where your favourite stocks are headed. Our topic for tonight, top 5 gold stocks to watch now. Before we get into the juicy part of tonight's show, remember that the clock's ticking. We're fast approaching the end of another year, can you believe it? For those new to the market, this is the time when the savvy investors start preparing their goals for the following year. Why? Because they know those who fail to plan to fail, and setting your goals this year increases your probability of achieving them in the time frame that you desire. So if tonight is your first time watching, thank you for tuning in and well done in making the commitment to get serious about learning how to trade the stock market. We really look forward to sharing many more evenings with you. Now, each week of the month we rotate through different markets, share our thoughts on the charts to keep you informed. Remember, our goal for the show is to make your trading and investing journey easier and safer by informing and educating you on the realities of successful investing and trading. Hello, I'm Janine Cox, and joining me tonight is Dale Gillham. We are Australia's most trusted stock market educators. How are you going?
I'm good, but I'm a bit disappointed.
Why's that?
I thought the title was we were going looking for gold watches, not watching for gold stocks.
Do you want to go shopping? I thought you're tired of that.
Well, we've been locked down, so I want to go shopping.
Oh my goodness.
But I don't. So I thought gold watches, watching gold, whatever.
Okay, I think you better talk about the special offer.
The special offer. Oh, the special offer. Yeah, we just to let people know, we did launch a special offer for people that want to do our education, our diploma course. We launched that last week, and a number of you may or may not be on our website or on our database getting our e-news. And if you are looking to get educated, we have a special offer at the moment that lasts for Christmas, and part of that special offer is that Janine and I are going to be mentoring.
Dale's going to stand on his head.
No.
And demonstrate.
Demonstrate on... No, I can't.
I'll pay to see that.
Just be quiet for a
I'll
second.
pay the full cost of the course to see that.
You're going to pay the full cost. There you go. Janine's going to pay the full cost of your course if I stand on my head. That's what she's doing. But no, let's be serious for a second.
All right.
Janine and I and one of our other senior traders has offered to mentor 10 people. So you'll get some personal mentoring by myself and Janine and one of our other senior traders as you go through the course. So that's one of the specials that we're offering you. So if you do want to talk to our team about what we're doing and maybe coming onto one of our courses, just shoot us an email, info@wealthwithin.com.au, or just give us a call tomorrow morning, 03 9290 9999, and say, hey, Dale said there's a special, I want it.
Now, are you willing to do the baker's dozen if we get an extra 2?
No.
Because we sometimes get more people putting their hands up and saying they want it.
You always want more, don't you? If you say 3 stocks, you want 5. If you say 5 stocks, you go for 7.
Value add.
Let's get on with the show. Remember, if you have a burning question for us, you can send an email or upload a 30-second video of yourself to Dropbox. Remember to send us the link. Now, remember to send your questions to info@wealthwithin.com.au.
Moving on, it is the 3rd Tuesday in the month, and you guys who watch it all the time know what this means. We're talking about world markets. So let's get into the charts right now, shall we?
Okay, let's get to the serious part of the show, okay?
Okay. You can see there on the list we have the Indian markets up 3.7% for the week. Wow. I think there'll be a lot of people in Victoria, Melbourne particularly, excited about that?
Yeah, look, I think it's, Indian market's quite exciting anyway. Now, it has been a bit subdued most of the year, but it's looking quite good at the moment. It's interesting how it's changing from being the US markets dominating to be more in Asia and Europe at the moment. You're getting that swing, and looking at the US markets, the Dow's more leading the last week or two, not the S&P and the NASDAQ. So there's, I think, like we talked about last week on our show, the money flow and moving. So I think that's what's happening now.
Right. Now, as you were saying, it's the Nikkei. The CAC is actually up 1.7%. Tokyo, 1.69. The FTSE, 1.66. It's looking for value, I guess. Dow Jones Industrial Average up 1.6. The S&P ASX 200 in the middle of the board, 1.23% up. Jumping down, I'll skip past the All Ordinaries. We've got the S&P 500 index, the US market, 1.16% up. That's interesting in itself. I mean, the US market was going up and all the other markets just followed potentially. And I've noticed in Australia, as I've been saying for ages, that the fund managers are just almost tracking what's going on in the US at the moment, aren't they?
Yeah, they tend to it's like we don't have breakfast unless we watch what's going on in the US, and whatever they're having for breakfast, we're going to have for breakfast. And I don't necessarily agree with that. I think, we should be following our own path, but then it's also part of all these products that are coming out, the hedge funds, the high frequency trading, all of that sort of stuff that we are against, and people shorting the market.
It's not allowing a real market, really.
It's not allowing a proper market flow.
Right.
It's, they're trying to... and as I say, they're trying to scalp the market, and it's not actually adding value. And I know we're not the only ones that think that at this point in time, but when you've got big hedge funds pushing things around and algo trading. But right now, as I said, I think the Asian market is picking up a hell of a lot more.
Yeah, look, I mean, it's interesting too that New Zealand dropped to the bottom, up only 0.35. It is early this week though. So we can't really make a judgment call. And we know that often the markets that go up hard at the start of the week won't necessarily keep that momentum going towards the end of the week.
Yeah, but we need to really look at things on a larger perspective to look at where the money's flowing. Now, the US market, the US dollar's down a little bit, which suggests certain things in their market. So, and obviously if the dollar's down, it could be meaning a weak economy coming up, so therefore money may not be flowing into the US market. But again, it could mean opportunities to buy assets over there, whether it's property shares or whatever that is.
Yeah, but I mean, I wouldn't necessarily rate it based on that, though. Obviously the chart's got to show where that money flows.
So let's look at a longer time frame, because looking at a week, and we've only 2 days in here anyway.
So if we look at the month, this is more meaningful at the moment. So we're seeing the CAC 40 index up 19%. That's incredible. And the FTSE, which has been just atrocious, is up 15%. So as you were saying, the European market's up 13.8%. The DAX up 13.69%. So it's totally dominated by European markets.
And you've got to think this is just on the hope of a COVID vaccine.
That's what it is.
It's just got to be hoping on that. So it's a bit volatile at the moment. So let's quickly move on to the yearly just to sort of get a
I just wanted to talk about what's at the bottom. So look at that. The Shanghai comps dropped all the way to the bottom, 3.8% up. And our market's doing reasonably well at the moment. But, you could look at it one week and the next week it's something different.
Completely different. So let's look at, here's the yearly now. So now we're seeing the NASDAQ all up the top, which is what we expected with all the tech stocks going.
Which is fairly consistent. We've seen these markets in all these, the NASDAQ 100 and the composite up plus 30% for some time. So that's not really any change for us to see this. The New Zealand market's also been reasonably strong over time. The CAC is in the middle of the market, so that these recent moves have made a big difference. So when investors look at the markets and they think, this is not performing, all of a sudden a month can make a big difference.
Absolutely. Because you see the Straits Times Index, and the FTSE, which was the big mover this week. I mean, they're both down the bottoms at 14s. Australia's now moving up. We're only down 1.7. We were down about 6% only 2 weeks ago. So the current bullishness at the moment is eroding.
I think we've left our run too late, though.
Well, we have, and we'll probably end up the end of the year up.
I don't think the Santa rally's really going to help us that much at this stage.
No, not at the moment, but it is looking quite bullish at the moment, but it's pretty good. But let's keep moving on. Olive, you finished with that? Or?
Yep, go for it.
Okay, so now before we get into our first viewer question tonight, I really did want to thank all of those who did take the time to send us in an email. We really do appreciate it. And if you don't get to your email tonight, please just remember to send it again my mouth's not working. Remember to send your email again next week, and we will get to that, especially if you tell us, hey, you didn't read it out last week. First email we got, it's actually a video. It's from Dinesh, I think. So let's take it away, Dinesh, and see what your question is.
Hi, Dale and Janine. Thank you very much for the great show, as always. My question is about the technical side of the gaps on the chart. If a chart has gaps on daily but no gaps on a weekly, could it be a concern? For example, Telstra, which has rebounded from its low, has some gaps on the daily chart, but there is no gaps on weekly. So can you please explain this technical side? And Dale, what is your take on Telstra moving forward because it has it looks like it has rebounded from its low? Thank you.
All right, take it away. You said Dale, can you give me your take?
Well, he said and Dale, so I was supposed to answer the second part. You were supposed to answer the first part.
Well, I'll let you go. I'm going to be a gentle woman and let you go first.
Politically correct. I actually like Telstra. I think it's really good looking stock at the moment. And often stocks that look really bearish, and which Telstra's actually been for quite a while actually, it looks bearish, they will turn around. Now Telstra, if we look at the chart, you'll see the big low back in Telstra in 2018, which was down here. It was 255. Let me get rid of this so I can see. 255, I think, wasn't it? No, 260, the low there in June 2018. If I bring it up a little bit more longer term, you can see, look at that. So you can see Telstra's been, really terrible stock way since this February 1999 high. And but you can see that first low there, that's 255 in November 2010. This was 260. A lot of people know that as a double bottom, but then it went up, looked good, and then it looked bearish again. So this is a really nice sign this past week, moving up nice and strongly, but it's not enough to get me too excited at this point in time. I am reasonably excited about the stock. I think it's stopped falling. I don't think it's going to go below that level there of 255. So I think this is a good area to buy the stock, but 1 week up really doesn't mean much in terms of the bigger scheme of things. I think if people right now, or this year, we've seen a lot of volatility in the market. We've seen a lot of gapping in a lot of places, based on rumours, news, all sorts of things. And so it's pretty much irrelevant what's happened last week. What I like to see is a bit more of a sustained move on the stock and keep moving up and not be in that stage of fear of missing out on the run, because Telstra, when it does run, or when it will run, it'll be a nice medium to longer term run over 18 months to 3 years, I would suggest, when it starts to move up nicely. But there's still a few challenges I think Telstra's got.
Now, gaps don't always result in the stock falling away, but it could.
Well, I think he's focusing on the wrong thing.
He's got to look at direction.
Yeah, and it's really about, and I was talking to David Blatt in New York this morning about property, and he was talking about, I was saying, what's the criteria around property that you have? And he rattled off everything except anything to do with the property. It was all about the process and about what's the goal, what's the intent, what's your return on investment, what's the capital you're putting into it, what are your expectations on rental yields, blah, 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 blah.
So we know nothing about how Dinesh has looked at this.
Correct. So that's really what I'm saying. It's about all the intent. And I said that's exactly how we teach traders. When we're teaching traders, it's not about Telstra, or it's not about BHP, or it's not about Westpac or whatever it is. It's about what are you doing to go about it, and then the stock is the last little bit.
Yep.
Because you find the stocks that fit what you're doing, not trying to make what you're doing fit the stocks, if that makes sense. But great question. I do like Telstra.
All right. Next question we have is from Avrom. Hi, Dale and Janine. Janine, you crack me up. How you keep Dale in line? Yeah, I know. It's give him a hard time, don't I?
You want to see what she does off camera.
Jeez. Dale, I have both your books and read them at least 3 times already. This guy's a sick puppy, isn't he? He's really got into your book.
You've read my book 5 times.
I have been trading for almost 2 years now and look at the charts daily using Metastock. Lol, I have been on workers' comp for 7 months after spinal surgery and have to pass the time while recovering. Wow, mate, take my hat off to you. This is a perfect time for you to learn. I just think about people who say that they haven't got the time, can't make the time. They don't have the sort of challenges that you're having, and like Dale said, a lot of excuses come up. But yesterday was a crazy day on the ASX as I noticed many gaps and many large, and I ran a scan for gaps and only for stocks above $1 and volume around, what has he got?
3 million.
3 million, is it? 300,000?
Yep, 3 million on the daily chart.
On the daily chart for 10 November 2020, 114 stocks that met my criteria, and this is a massive number compared to other days. Can you advise what would trigger all these gaps? It can't be news from each company. Well, you're absolutely right. because this was a market-wide thing. So this is what we were talking about with all the algos, short positions being unwound, institutions taking a position and following the US to an extent in terms of the sectors over there, and picking some of the stocks within those sectors that have got opportunity. So that's really what we've seen, the money flow going in there. And it doesn't necessarily mean just because there's a gap on a chart, if it's a market-wide thing, that stocks are going to come back and fill it. You just never know the answer to that.
It's context, isn't it, really? And that's really sort of what you're saying. In the context of last week, gapping around was just nothing because all the algo trading, all that sort of stuff, whereas 10 years ago, gaps would meant a different thing.
Well, look, BHP gaps all the time because
it
it trades on the overseas market, so any stock that trades overseas experiences that, so it doesn't necessarily mean that it's always going to fill those gaps, but there are some stocks that do.
Yeah, but you're filtering, and this is what I find a lot of traders do when they go, hey Dale, what kind of scan can I do to filter out the stocks to buy? And I go, that's the wrong way of approaching the market. It's about having a list of stocks that you watch and know them backwards. And I take my hat off to you, being in bed with the back operation. We've had many students at that. We've had several quadriplegics do our course. We've had blind people do our course, or legally blind people do our course. You name it, we've had people do that and that's what Janine was saying, is there's no excuse. If you want to learn how to trade, you can do that. And obviously being in bed, you're obviously in pain, and it does make it hard to concentrate, but really make your life easier and narrow down your focus. Don't go through big scans and trying to get 107 stocks. It's always about what we were saying to the previous, to our video person, it's just narrowing down, looking at what are you trying to achieve and come up with a strategy around that, and then you're only looking at a really small chunk of stocks. And it's sort of like, I explained that when you first meet your partner, you don't really know who they are. You don't know what they're going to say or how they're going to react to whatever you do, but after you've been with them a while, you know what they're going to do, and they know when you're going to get yelled at. Like I know when Janine's going to yell at me and bring out the swear jar, because we've been around each other for a long time.
Be careful of that connection, because I'm not your partner. You have a partner.
Correct.
I'm your partner in the show. And
your partner in crime here.
In business, but
But again, we've been around. Janine and I have been friends for 20 odd years, so we know what each people's personality is, and that's really what you need to know. With the stock, you need to know when somebody's in a good mood or in a bad mood, and that's really how you get to know the stock. If you're just scanning stocks broadly or scanning the market for
just
certain
ask
things,
why you're doing
just
it.
Not doing it. And
really, it's just trying to pick the next best winner rather than being like the tiger or the lion, being prepared to pounce on the prey, having done the prep, and then going in at an appropriate time. So, you can't possibly be across that many stocks and know them really well. No. And the best traders take fewer stocks, like Dale said, and know them like the back of their hands.
But great question, and well done, matey. Look, I really do applaud it, because it is tough. I know, as I said, we've supported a lot of students in similar situations to you, so keep it up, and we're here to help you as well. So our next question we've got is pretty much on the same subject, but on a different stock, and it's from Wes. He says, hi Dale and Janine, last week there were a lot of stocks that took off and gapped up on the daily chart, Oil Search, Telstra, Santos, to name a few. My question is, are these gaps likely to be closed? I'm hesitant to buy the likes of Oil Search now after a 30% rise in a week, even though it's signalling an entry on the weekly chart. And I pretty much think we've sort of answered it. Gaps are overcooked at the moment, and really that's not meaning a lot. And you can't just trade looking at gaps. Trading is about understanding price, pattern and time. There are three elements to the market. The market trades in price, it trades in time, which is days, and it also trades in certain patterns. So time and price make patterns. Just looking at one little element of it is not really a solid trading strategy. You need to have a lot of rules and techniques, and to bring a confluence together of then this suggests X is going to happen with high probability. So, and last week was an anomaly because everybody's thinking there's a vaccine out, and we're seeing algos and everything else.
But it's a bit of this situation, looking at the risk and the opportunity when you're purchasing a share. So like with a stock that's already run hard, for example, because this is a challenge for people, and even traders that do our courses, they'll do the analysis, the setup will be there, they go to take the trade and the stock shoots higher. And it's really about analysing how, what's the risk and the reward, or the opportunity, and if the stock's already run to the level that you think it's likely to turn at, then it just increases your risk to take it. So but it becomes a judgment call to decide whether or not to do that based on rules being met. So then that's experience, and that's actually being able to analyse the history of the stock and know the stock really well.
Beautiful answer. What a
All
legend.
right. The next email we have is Joe. Thanks, Joe. I think we've had a few emails from you. Good on you. Yeah, keep going at it. Hi, Dale and Janine. I'm wondering what your thoughts on Metcash are. I'm not usually interested in small caps, but it has a PE ratio of 14 and a dividend yield of 14%. I'm considering buying this stock. Thanks, Joe. Actually, I know Metcash can have some liquidity issues from time to time, but I wouldn't necessarily consider it to be a small stock
cap.
per
It's
se.
smaller, but
yeah,
it's
if we just get the volume up and have a quick look at it, I'll put the crosshair on so we can get a feel for what we're talking about. Now, of course, during COVID, volumes did go up. But if, say, it's around about 17 million units traded a week, and it's and it's a $3 stock, it's not a small stock.
It's not a small stock.
So it's got, but it can be volatile because the liquidity's not like a BHP or a Commonwealth Bank. So that's what you've got to understand. So looking at the left-hand side of the chart, I think there's potential with Metcash, and I think that it hasn't gone down significantly with the COVID sell-off. It's actually been quite resilient, and so have the other stocks like Woolies and Coles were quite resilient during that period as well. And they often tend to track similar sort of trajectories, even though the chart can look a bit different at times, they can become similar. But, I'd like to see it get strongly above this $3 level to see it go higher on the upside. The downside risk, though, is that if it starts to pull back below about 290, then it could head for this low, and that would really signal that it's going south if it goes below there. Yeah, so Metcash looks interesting. Good question.
Fantastic. Now, the next question we have is from Chia, who says, hi, Dale and Janine, a long-time viewer. Thanks very much for that. Thanks for the support. But the first email to ask about your thoughts of a penny stock. Thank you for sending us your email. And if you've been watching for a long time, I know there's a lot of people out there that have been meaning to ask a question, but never quite got around to it. But next week's your week, everybody else. The question she's got is ASX, I think it's CI1, the Hong Kong-based company, has been performing very well with recent acquisition in Singapore, and Australia's debt restructuring business has achieved a 400% growth in net profit after tax, as well as 200% growth in revenue. However, the trading volume has been extremely small, and the share price is very stagnant at around 2.5 cents to 2.8 cents for the last 6 months. I'd like to hear your thoughts about this debt restructuring business, given that COVID-19 has made the entire economy more than ever into debt, with reducing interest rates and high unemployment rate. Wow. Am I allowed to? No, I'm not allowed to do that, am I?
You can do what you like.
I don't like it.
Look, you just congratulated the person for sending in a question for the first time,
That's
so
why
you better think
for
carefully how you're going to handle this one.
No, I think it's fantastic.
I'm going to leave you there.
You're going to leave me hanging, God. Jeez. Well, I mean, looking at the thing at the moment is, I'm not sure why you'd want it. I really don't. And to me, this will be very, very hard to trade. And I think the assumptions made on the debt problem, I know Australia's personal debt, I think there's a lot of, that's been coming down. Like people being locked down, they're paying off debt, they're putting money in. There's a lot of cash out there at the moment, and people are paying down their debt. Low interest rates means they're paying off their home loans and they're bringing those down. So I don't necessarily agree with the metrics around all that.
It's about the government debt.
It's about government debt, so it's a little bit different. So right now, this is not giving me any level of excitement. And trading these little specky stocks around 2.8 cents, hoping to make money, is really, it's a gamble. You may as well just get a coin out and just flip it and go, yep, heads or tails, am I buying or selling?
But we can still get direction, even from a low liquid stock. So I appreciate what you're saying. You're trying to encourage more focus on bigger stocks and not to worry about these types of shares.
Yeah, but it's more of slow is quick.
It's more about the methodology. How do you choose shares and how do you end up with a share like this? To me, this is more about the story rather than fact.
Correct. Yeah, and it's if somebody's telling a great story, then it might move. But then how sustainable is that?
Yeah, well, I mean, look, if it goes above this high here, that was the August high, I think. Is it September high? 3.2 cents, then it's got a chance of moving. But still, it's going to be one of those things that you just can't let it go. You've got to manage it really carefully.
Well, to me, look, answer a question. On these types of stocks, out of 100%, what would you say you'd get it right? an average person would get it right.
You could get it right maybe 30% of the time, and the problem with it is it just can go, all of a sudden reporting season comes up and you get wiped out because people try to get out of it and you've got no liquidity in it.
So that's sort of my point. It doesn't matter whether you get it and you make some good money out of it by flipping the coin, so to speak. The chances of you getting that are low.
Yeah,
you know, I'd rather
depends
go
on your knowledge too, but yeah, for most, I'd say
for most
low.
people. Cool. So now we're going up to my. Somebody is asking me about my book. I know a few people are asking about my book, How to Beat the Managed Funds by 20%. So the special offer that we'll send it out to you for free. You just pay the shipping cost. I believe there's a link up on the top left-hand corner or down in the comment section. So please, if you do want the book, it is there, but only buy it off the web page. You don't go to the bookstore in our website. Just get it off off the front page. There's a big graphic on there saying get the book for free. Just pay shipping. Click on that one, and you'll get that special price for you. We've had a few people in the last couple of days going, I went to the bookstore and it was $30 on there, and I went, yeah, but you need to go to the home page. So that's where you need to go.
Now, I hope you're enjoying the show so far. We've got lots more to come. So before we get into that, now's a perfect time to hit that subscribe button and also like the video. Now, we've got the topic, introduction, drum roll. Yeah, I knew you would. You had a good weekend, so you're feeling a bit more obliging, aren't you?
Oh, look, I went home to Gillham, to my old stomping ground.
Okay, a bit mellow. Now it's time we get into the topic for tonight, which is top 5 gold stocks to watch now. Now, we're often asked, what is the best way to gain exposure to the price of gold if it continues to rise? Should I be buying physical gold or the top 5 ASX gold stocks to make a profit? In times of uncertainty, investors are flocked to gold as it's considered a defensive asset that allows you to hedge against a stock portfolio. However, for this to be true, gold would need to be rising when the stock market is falling and falling when the stock market is rising. But is this really the case? We intend to let the charts answer that one. Now, gold has risen by around 50% in the last 4 years, but will gold continue to rise, and will it repeat this in the next decade, or are we likely to see a significant price correction in the years ahead? Interesting. In tonight's show, we'll take a hard look at gold and answer these important questions, as well as sharing some top 5 gold stocks to watch right now.
Okay, so no gold watches, but gold stocks. Now, there's been a long debate of whether to buy physical gold, gold stocks, or ETFs, and we've chatted about this on previous shows. And you can also watch a recording. Janine and I interviewed, you interviewed Joshua with me, didn't you?
No, you
I
did
just did it on my own. I kept him
right.
on my own. Joshua for our Talking Wealth on flix.net. So that's flix.net. But we also put that interview up on YouTube, and I believe the team are putting the link to that video below. So you can click through and watch that. Joshua's a gold expert, and he talked about a lot of that sort of stuff, gold ETFs versus physical gold, why you would do it, the positives and negatives. So go and watch that one after tonight's show. Don't do it right now. But we've got to get into our thoughts on gold and what we're doing here.
Yeah, I guess, first of all, just discuss a few points. I mean, from your perspective, you were more in line with what Joshua was saying. I think we've talked about it on a previous show that I actually prefer to purchase the physical stock or even an ETF in gold rather than the bullion. But there are lots of ways, you can look it up on the internet. We found how to do that. But your preference is still to buy the physical gold, is it?
Look, there's positive and negatives. Physical gold's great because you've always got it, So
but where are you going to put it?
Thing.
You can't shove it under your bed.
So
you've got to find out how to store it safely.
Yeah, if you've got a kilo gold bar, what are you going to do with it? Use it as
put
a
it around
doorstop?
your neck, maybe.
Yeah, you could.
Line your bras and your undies with it.
I don't have bras. To me, it's like, but that's true, isn't it? Unless you've got a few gold coins and you can keep it at home, which is fine in your own home safe, but then you've got to store gold, etc. But there are positives around that, but there are also negatives. Like if you own a gold stock and the mine goes broke, then you've lost all your money.
Or it's all in one place.
It's all in one place, so there's concentration risk there. Gold ETFs are great because you're spreading your risk and you're into an area that you may or may not understand properly, and they can spread their risk across a lot of gold stocks, or maybe taking hedges on physical gold. So there's positives and negatives around all of those, but but one will suit everybody. So it's more about what is your intent, what are you trying to do.
Yeah, that's good. Now look, I mean, we've got some websites here that we want to share. So one is onfinder.com.au.
You going to sing the jingle?
No.
Okay.
Now, how to invest in gold in Australia. So there's a whole lot of research, and it's really important that you do your research. I'm not suggesting this is the only place to look. You need to spread your risk and also look at what happens when you buy and sell gold from a tax point of view and understand that. So the ATO website might help you there. But how to invest in gold in Australia, compare gold dealers, gold stocks and online brokers. Now remember, you will find fact and opinion anywhere.
Correct.
So that's what you've got to be mindful of. This is about building your, expanding your thinking on gold, but not necessarily saying, oh, that's what I've got to believe.
Yeah, I mean, Finder's got some great articles. I mean, we contribute to Finder all the time ourselves, and they've got some great articles, but it's just one person's opinion, and I think you're better off, like you were saying, is more have a balanced opinion.
You mean if you read an article, it's one person's opinion?
Yeah, generally. So look, and I would read a few different articles to get a more of a balanced view of what really is the areas of gold, whether it's ETFs, gold stocks, or our physical gold, and really do your research on all those. But Finder's a great place to start.
Yeah, and so look, there are a few websites too where you can actually buy gold. And now I'm not endorsing any of these particular companies or websites, but this is all part of your research. So ABC Bullion was one of them. So it talks about buying gold products, and there's a lot of research information, not just for gold, but other commodities as well, like silver. And then we've got the Perth Mint. If you've watched some of our Flicks shows, you'll have watched Brent and Drew, and they talk about. I did an interview with them last week, and I think one of them aired this week. Did it, or it's airing?
Yeah, one's airing again this week. One aired last week.
One next week.
Yes.
Yeah, and so they love gold and swear by it, but they've got their guns to protect themselves because they're in the US. So, what do you have to protect your stash? Now, you can see on this website there's a lot of information there. So just have a trawl around. The Perth Mint you'd think would be quite interesting to do some research on their
Perth Mint,
website.
I was chatting to a broker, not a broker, a former broker, but who's he's now into bigger deals, getting lots of investors, wholesale investors into it, sophisticated investors, and they're launching a new fund basically on cryptos, buying all the cryptos. And he was talking to me about it only on Thursday, but he said the Perth Mint was involved in a Bitcoin, buying Bitcoin and having it backed by gold for quite a while there. I'm not sure whether they're still doing that. I think that sort of got separated, but they were doing it. So there's some interesting stuff happening around gold.
Good to read about.
So.
Look, as with anything that you trade, the most important thing that you need to know is about the direction. So it doesn't matter whether it's a stock, a commodity, currency. So you check this first and then buy using a proper trading plan that you've tested yourself. Never just buy based on opinion, and never buy on somebody else's rules. Even though we teach you rules in the course, we actually teach you how to think and how to analyse it. So, and I like to talk about it when we used to have the workshops. So I used to talk about it like, become the mad scientist. You can just see the hair sticking up, and work these things out for yourself. That's what we give you, that power to be able to do that. So I think it's time that we have a look at the price of gold on a chart, shall we, and just see what the chart shows us. So if we go to...
so we're going to compare gold with the market?
Yeah, I think it's really important because we're talking about, is this a myth that, gold is going up and therefore the market could be down in times of uncertainty? Do we rush to gold? What tends to happen?
We do get that a lot. When the market pulls back, people go, I'm buying gold because that's the hedge and, that's what you need to do. You need to go to safety, but to me, when you put... Is there an inverse correlation? That's what you were saying before, is between gold price and the market. Because if you're saying gold's going up, it means the market's going down. But is that going to be the case? And so if the market's rising right now, that would suggest that gold should be falling. So let's actually take a look at the chart and actually see the facts. And this is going to show you exactly whether gold does do an inverse correlation to the market.
Yeah, so let's have a good look at that. So we can see here that... the All Ordinaries is the line chart.
Is the line.
So that's that huge move there that we saw during the GFC. It peaked, came down, and we can see what happened to gold. Now, it's not exactly percent. You can't always measure it exactly because when I've overlaid the market, it's not directly to the scale. It's in time it is, but not necessarily in price. But we saw this huge rise on the All Ordinaries index, and of course we've seen a big rise on the gold price as well. Now the interesting thing was, into the lead up to the GFC, the market actually topped out in November 2007, And if I look at where the gold price was in November 2007, it was peaking here, but it still ran on for another 3 months before it actually topped.
So initially people jump into it and push gold up a bit, but then that...
Yeah, but what does that tell you? Because people are still buying into the high. People are still buying after the high because they don't know what they don't know.
Correct.
And so they're buying based on stocks getting cheaper. So is it the smart money going in there? Because I don't think so.
I don't think so either, no.
I think it's just the industry telling the story and then all of a sudden gold falls with the rest of the market. That's my take on that one. But there are times, and there are quite a few times on this chart where it's showing that the gold price continues to go in times of uncertainty. So there was all this uncertainty in 2009 through to 2011 and 12. Remember, in the wake of the GFC, there was a crisis going on in the US,
But you would have thought gold would have been strong then.
It was still hanging on there, but gold was actually strong in the lead up to it, but again, was actually sideways through that move and then fell away quite heavily, and we saw the gold price fall all the way into this low in 2016. Okay. So just to illustrate a couple of moves though on the market, if I just, now even though I've got a little trend line in there, it's not a trend, it's just a line there to help me see what's going on. So this is when there were some significant falls on the All Ordinaries Index, and we're seeing there the falls happening on the gold price as well. You know, pretty close to around the time when these major falls were occurring, the gold price was falling, except during COVID, that was manipulated. Yep. It wasn't normal, and so therefore that to me explains that anomaly. But there are plenty of times when the gold price is rising beautifully and the market really hasn't done much. So, you know, you're looking through this period here and the gold price is going up strongly. But quite often you'll see that let's just bring up a couple of examples here. Hang on, I've got something there hidden. We can see that to the high in the GFC, so if I take the equivalent date...
I'm champing out the bits to find the stocks.
Yeah, well, just hang on a sec. We'll just look at one thing, right? So this is just one example of where the market rose 158% approximately from that 2003 low to the GFC high. Now, gold rose by roughly the same amount.
Made the same amount.
See, and I mean, I'm saying that gold can be good at times. There are times, if you go through the history of this and do your own analysis of it, you're going to find examples where gold will outperform the market.
Yeah, and you will find that all the time.
You know, but it's about, you're going to diversify yourself. You know, the industry talk about going into bonds as well, but then there are all these arguments that bonds don't really yield.
Gold tends to be more of a longer term investment, and as Joshua said, generally it runs at about 10% per annum.
Yeah, but longer term when? Like, you know, if somebody buys into gold at the top of the market, they think, okay, the market's overheated, I buy into gold, they got a good run into the high here, but then those same people won't have a clue to look at a chart to see when gold weakens and when I should be out of it. Because this was a long-term decline that we saw into that low. So you still need to be able to get out of it at the right time. And then gold didn't appreciate in value for all these years. So going all the way from July 2013 all the way across here, it was up and down all over the place. Now, this baby doesn't pay rent, unlike a stock. So that's one of my arguments for going for the ETFs and the stocks.
Okay, so now we have some stocks to share. So what are the top stocks to watch? Or what are the top stocks on your watch list right now?
All right, now, that's a real secret.
That's a lot of stocks.
Okay,
I thought we only had 5. You're going further.
Now, we're just going to have a look at what's happened for the week here and just look at the leaders board. So we can see lots of small stocks in there. So just to explain this, on the left-hand side, you've got the stock name, then you've got the code, you've got its last price, the change for the week, I can change that to month or year, the market cap for that particular stock. You can see a lot of small numbers here in the millions it is, so that's really, really low on the scale, and I wouldn't even be looking at those sort of shares. Low market cap on reasonable volume, but still the value of it doesn't really make up for it. So, you know, that's why market cap to me is one of the it's the most important thing that you can be looking at when you're looking for the shares. So we're looking for nice big liquid shares. Now we know Fortescue is really an iron ore play, a large iron ore play, more so. And if you have a look at the chart of gold, it does track gold reasonably well at times, but then it's really going with iron ore, the iron ore activity. So, you know, I decided not to, even though I like FMG and I'd always have it on my watch list, I decided not to put that in there and just pick some of the other, you know, gold stocks that mine gold. So you
would look at the top 10 of those?
Oh yeah, I would look at the top 10 shares. When you start to get down here.
They
We're
get too
talking
illiquid.
about getting more illiquid. Now, maybe not for an individual, but for example, we wouldn't look at these because they're just too illiquid. I'll just give you an example because you like to talk about the dark horse, and I know that sort of gets you interested.
So we need to get into your 5 stocks.
Yeah, but before I tell you...
Otherwise, Santa's going to come down the chimney and give me a present.
Okay.
Because we'll be here that long.
Oh, goodness me, the mind boggles. 10 million a week, okay, in terms of the number of shares, and we're talking about roughly a $2.20 stock. So that's okay, but it's still on the low end as far as I'm concerned of the spectrum. And some people are probably saying, well, gee, that's not as illiquid as some of the stocks I'm looking at. But so if we go back to that list, you can see there I've got Newcrest Mining, Anglo Gold, Evolution Mining, Oz Minerals. IGO is another interesting one, Santa Barbara, Oceana Gold. Now, you've taken all the delisted ones out of the list. So this is Optima, giving us an easy and quick method of searching the shares. We've shown you other methods online. Western Areas was one of the ones I just showed you before. Now, you could go down a bit further, so you could go down towards Grange Resources, but you're getting much lower in that zone there. So if we just stick with the big ones, and we're talking about Anglo Gold, the next thing you've got to do is just have a look and see how it moves in relation to the gold price, because if the stock doesn't move with the gold price, then it's not going to be, in my book, an easy stock to trade. And this stock is reasonable. Like, it seems to be tracking some of the moves that we're seeing now, more recently anyway, in the gold price, which is a good sign. But it's trading right down now. It's fallen away much more heavily than what the gold price has. So that's telling me there's some
so what are the others? So what are the other 4?
Okay, so
because they've got all their pens ready on their pad.
Yeah, Newcrest I always like, but it's not an easy stock to trade. Even I've had students come and say to me, oh, geez, I've back tested this one and found that, it doesn't work on just normal, simple rules. You've got to really work the rules on this one. Now, Newcrest follows the gold price reasonably well, not exactly, but it has some really good moves. So it's a nice stock to trade short to medium term, but more short term. So I like Newcrest. That's one, but it's a higher difficulty, if you like.
Okay.
Now, Evolution Mining is a really good one. It's a trending stock. So this is how you pick some nice stocks to trade. But look how it sort of emulates that movement on the gold price. Not as volatile, but when it rises, it really has taken off, hasn't it? So, I mean, that's showing you the history of it. Is a good stock to have on the watch list. But right now, I'm more thinking there's a potential downside in gold shares at the moment. So we need to, it's not about buying them right now if they've been falling. It's about waiting for them to make the moves, break out of sideways moves and trade higher.
Next.
Oz Minerals is a favourite. So that one looks really nice. There's a potential that it could come back and find support, but it might not. I mean, it's already shot off really strongly, so it may come back to these support levels across here. I'd just be watching this one because I don't think right now is the right time to be looking at it, as I was saying. But this move's different to the gold price. But I'm just going to show you the chart of this. You want stocks that have actually come off their bottoms as well, that are nice and liquid. So have a look at that. Long term, it looks like there's some reasonable upside for this share, but it's at a strong resistance level at the moment there.
Okay, next is?
Sbm Santa Barbara. This is a stock that historically I've always liked. It's a great trading stock that you can trade for a number of months and make a good gain out of it. At the moment, it's down like the rest of the gold stocks, but if this stock gets through these levels here, closer to $4, that would signal to me a really interesting opportunity.
Well, that's your 5. How many have you got? 6 or 7? Geez, you're stretching that.
I like this Ramelius Resources. It's actually trended really nicely over time. So if you have a look at that, when it moves, it actually has some really nice rises. So you can make some good money out of a share like this. At the moment, like the others, it's coming back. But I think once this settles down, if it finds support about $1.45, then I'd be looking for a logical entry based on technical rules only on these types of shares to trade it. Now, WSA was the dark horse. Because of the lower liquidity side of it. But not just that, because this pattern is so interesting in the history of the share, I think that this could be something to watch. But if it continues to decline, then I would, the recent pullback we've seen on it was a bit worrisome, this pullback we've seen here. October, if it continues to go below this low, I'd just wipe it off the list altogether. But if it rises, it could be really nice.
Fantastic. Thanks, Janine.
That's okay. Now, after all that, can I have a drink of water? I'm
Yeah, you can.
thirsty. Let's get into some more emails, but before we do, remember to hit that subscribe button now, and whilst you're there, give us a big thumbs up and click the like button. Come on, I know you want to.
Okay.
Give it a go.
Well, we've got another video, and that's a question from Peter, so take it away, Peter.
Hi guys, hope you are well. I know this is the Australian stock market report, but I was hoping you might be able to cover something that Dale mentioned probably about a year ago now, that I've been following ever since, which is the Altria Group. It's on the American exchange. MO is the code. To me, it looks like it's been following a very regular pattern down channel. And interestingly, in the last sort of few weeks, month or so, seems to be breaking out of it. Looks like it's about to go through that upper trend line. Give you your thoughts. That would be great. Thank you very much. Cheers. Bye.
Right, this is an interesting one, isn't it?
Yeah, good looking dude, hey. I love his man cave. He's got drums and guitars. My kind of man,
fantastic.
hey. We could jam, get all my guitars out and everything else.
Okay.
So, yeah, I actually don't even remember talking about this stock, but it was a year ago, so that's a long time in my time.
So you know you're being watched.
I know he's been watching it, but I do like this stock. When I had a look at the chart again, I actually don't mind the stock. I mean, obviously, Altria Group, it's done this beautiful trend right down through here. It's really nice. If you want to, it's just such a good trading stock. And these are the types of stocks we like people to trade because they just make it so much easier. And when people are looking at those really low cap stocks, they're just making their job hard, you know, and it really is, it's about finding a good strategy and then knowing what your strategy is and then picking stocks that fit that. And what I find, that's what I was saying earlier, is people try and fit stocks onto their strategy, or they don't have a strategy and they just pick stocks that hopefully they might go up. Well, I do actually like this. So looking at the chart again, you can see a beautiful, downtrend right down
it's
through
symmetrical
here.
Almost to the upside.
Yeah. So if this thing does start to take off and go above that sort of line there, I think it'll probably be a really nice sort of trade. I do like that. So very well done, mate, for keeping an eye on the stock.
Now, we don't want to encourage necessarily to talk about American shows because it is the Australian stock market show, but I think you were allowed this one through because it was a video, didn't you?
I allowed this because it was a video and I didn't get a choice. You put it in there anyway. So, but that's it.
Okay. All right. Now we have a question from Andy. Hi, Dale. Can you please share your thoughts on Perenti Global, PRN? The fundamentals are good, i.e. undervalued, good earnings, paid good dividend. The technicals aren't bad either. The weekly chart forms a breakout from the flag formation. The plans to buy the stock and hold for at least 12 months. Thanks, Andy. Okay, so we know the fundamentals of what they are. So what he's saying is the fundamentals are supporting a rise. It's a good share. Technically, it looks lovely.
It does look lovely.
I really like this share. I think it's a good pick and I would stick with it. If you have some really good rules on it, then you could do well with a share like this. But history will tell you whether the current move is actually a good way to trade this share or not. So, but, you know, I mean, if it takes off and we see I'll put the crosshair back on, but if it goes above here, there's some resistance there where it's trading it at the moment. That could be quite nice.
It's quite volatile, but it's more of an orderly volatile rather than a random volatile.
Yeah, it hasn't been messed with by the look of it.
Yeah, so I do like it at the moment, and I do agree with your technical analysis on it. I think so far from what I'm seeing at the moment, I think you've got a good strategy at this point in time, but let's just see where it does at the end of the week, see if it holds up. You know, at the moment, we've got a slightly high close on it, but it's only a couple of days
always nice to see the fundamentals backing the technicals,
correct.
But at the moment, the fundamentals have been so skewed because of what's happened with COVID.
Yeah, and you haven't been able to rely on them so much because it's really sort of a bit of speculation with the fundamentals, so it's good you're doing both parts or both sides of it, especially if you're more of an investor. You do need to do both the fundamentals and then look at the chart to see for direction and strength. So fantastic from that one. Thank you very much for sending that question in. The next email we've got is from Fahad. Fahad says, hi Dale and Janine, can you please take a look at Costa Group,
you like
a Geelong
Costa,
company. There you go for me. The monthly and weekly charts both look great. with nice and steady rise on the weekly chart. I see higher lows and higher highs with a wet summer expected ahead, less bushfires. I think this has potential to take off, especially when other stocks in the same industry, elders, have already taken off. Yeah, look, I do agree. I know when we talked about this stock late last year, I said I do like this stock, and I know we did say it was setting itself up, and it has run quite nicely since then over the last few months. But let's have a quick look at the chart. It's done really, really well.
It has. Look, it's trading at an important resistance level at the moment. It's got the potential to go to 440 to 480 in the short term. Yeah, I like it too. So not just for now, but I like it more for a trading stock. It's a small, lower liquidity share, but I think as a trading stock, it's going to be really nice, isn't it?
Yeah, some of these small stocks like this can give you some, if you have some good rules around and nice stop losses, you can make some really nice little returns in 6 months.
So what's the volume on that one then?
The volume on it, let's just put the volume up there and we'll whack it on the bottom, and you can see here it's a little bit lower at the moment than what it was through 2019 and 20, but looking at any one of these, you can see here's 5.1 million through there at $3.50 odd. 4.7 million.
So it's really on the lower end.
It's the lower end of it, but it's not too bad. I'd like to see a little bit more volume here, but it has been a little bit low. I mean, obviously being in the food industry with farms, etc., wholesale fruit and veggies, all those sorts of things. I mean, I know the guy that owns, he's got a huge house in Geelong, so I know he must be doing okay.
Well, look, looking at the downside, where the stock's fallen away really swiftly, back in 2018 and then 2019, that gives people an idea for the personality of the share. It's really important to pay attention to those moves on the chart, because that could happen again at some point. Correct. So you just need to be aware of that. It could just drop, on a news report or something.
Yeah, so just have some good rules around it. Pretty much that's what we're saying.
All right, so we've got a question from a Bayer. Hi, Dale and Janine. Is it a good time to buy AGL? At present, there's hardly any value stocks in the market, and the rest of the energy companies have gone up significantly. It seems AGL is bouncing back, and I wish to buy at $13. Please give me your kind thoughts on AGL for the next 3 to 6 months. So,
do you know what she means? Well, I'm not sure whether he or she, a Bayer. Value stocks.
I would say it's about fundamentals more than anything. So you're looking at PE ratios and the like, and it is a challenge right now to find value stocks that are actually rising right now. At the moment, I would say to just get ready for AGL. It's not ready yet, but it's still trying to pad out that bottom at the moment, and it's very thin on the ground on that low. So we like AGL. It's one of the stocks that we think could be interesting going forward, but it has got quite a few hurdles to get over on this rise. So if it can stay above $14, $15, then that would be really good for this share. Yeah,
as I said, I think I agree with it. It's a little bit early for this stock, but just keep it on your watch list. I know Janine and I said materials, energy and financials for the next year, so this would be one of the ones we would have on our list for watching for a possible entry. Now, next we have a question from Max, who says, hi, Dale and Janine, would love your thoughts on PNV. He says, I feel like I missed the boat on this one, as it looked like it set up from a nice basing pattern just above $2 to the $2 mark. Regards, Max. Thanks, Max, for sending your question. It's really good to have your question. So is this the stock we're looking at? Yeah, so look, this particular share, I can remember vaguely us talking about this one, and you can see that there's a lot of resistance around this level, and I think we were talking about, I think, sometime when it was coming back in this decline. Yeah, probably know. So it looked quite bearish at that point in time, and so we wouldn't have thought it would do much based on that particular move. But you have to then look at each bar as it unfolds on the chart to tell you whether the situation's changing. And of course, through here, it started to prove itself, and going through that resistance level, it just looks really interesting now. Yeah, it does. But I would expect it to come back in the shorter term. I'm not sure about the basing pattern idea on it, but I would think, this such a strong rise. If you look at how it rises, it goes up for a few months, 1, 2, 3, 4, 5, 6, 7 months here. 1, 2, 3, 4, 5 months roughly through here, and we've had, this is weeks, sorry. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. We're in week 10, so you'd expect to come down a little bit more short term on that.
So what you're saying is you want to see the pullback and then a push higher, because it's right near the all-time high anyway.
Yeah, it's right near the all-time high and has broken into that sort of blue sky above some of those other peaks through here. But to me, again, it's like stocks rise up and fall down, and then they find some levels, a next level of support to move up. And I always talk about it being that you can't walk upstairs till you put your foot down to get the leverage to move up. So you've always got buying and selling on stocks. So you do need to, I call it checking the weight of the buying and sellers. And when it comes down, then you can check how voracious the buyers and sellers are. If it's just the buyers pulling back, the stock will drift down a little bit. If the buyers, the previous buyers are selling heavily, then it's going to fall heavily. And so therefore we're measuring that, and it's just like getting a pair of scales out and measuring that sort of strength of the stock. And that will tell us whether the next move is going to be further going up again and how strong that's going to be, or whether there's more downside on it. So it's just weighing all that. But
I agree. Are we moving on to the next question?
Yeah, it's all
We've
yours.
got the final question tonight.
Is this the final question?
From Brian, and you just made it in by the skin of your teeth, Brian, because I had to ask the question of the producer whether it was okay to let you in. So just try to keep those times to 3 o'clock
with
as
chocolate
much as
and
you
all
can.
sorts of stuff.
Hi, Janine and Dale. I would be interested to see your opinion on Suncorp. Sun is the code, as a medium to long-term buy. Seems to look like it may have broken a recent downtrend line, but there are some gaps on the daily chart. Risk of the stock coming back to fill it, and thanks for the great shows. Cheers, Brian. All right, now looking at looking at the big picture here is very polite, Brian. We can see there right back into the 90s, Suncorp, as a check at history, especially through the GFC. So I actually was talking to some people who do business through Suncorp, and they thought, well, we do business through them and we actually like them, so therefore we buy some shares in them, right? Which is not the right way to think at all, because that's the biggest risk you can take, is just to think, oh, well, I like BHP, so therefore I'm going to buy BHP, but the timing is so important. Well, so
Telstra's the classic one of that, isn't it?
Isn't it? And Suncorp fell 80% during the GFC, so that just shows you the volatility that this share exhibits. And even before then, we saw that big pullback that occurred into the 2003 low here. So look, it can be quite volatile, and COVID has proven that that's the case, but technical analysis would show you that there was this pattern. So we avoided this share for a long time just because of what was going on around this zone. We didn't like it, and we could see that there was a potential downside. Well, COVID's actually helped flush that out and allow the stock to fall away. And moving ahead, it's got some hurdles, but it's starting to look interesting. I just wouldn't be trying to pick it off this bottom. I think there's a reasonable probability that it will go up, like if the banks and insurance companies are moving up, that it could start to move up nicely. However, I still think that there's some risk with it.
So how's this stock? I mean, obviously Suncorp is a little bit more insurances than banking. Obviously the cost of money for them is higher than it is for a big four. Is there a second tier bank? Where are they making profits, or where are they likely to make profits to get the growth?
Well, look, I mean, at this point in time, though, you'd think that they would have had to have lost a reasonable amount of business, and maybe that's why it's not just a COVID effect; it's the share price, because it was already rolling over into that move. And the insurance companies have all been down in exposure to insurance QBEs, but they are starting to, or have been starting to improve slightly. But then, insurance companies are always questionable as to when's the right time to buy them. But it could set up soon. It's just that you look at the monthly chart and it's only just taken off. So we've seen this lower low this month, which is really interesting that the stock would trade lower and all of a sudden trade higher. But the direction's still overall sideways in effect when you look at that range on the monthly.
So what are you saying? Too early, or?
I'm saying, look, for higher risk takers who are looking to trade short term, potentially there might be some money to make there.
Okay.
But you have to have a really good set of rules. But if you're looking for more medium to long term, it's too early at this stage.
There you go. You heard it from Janine.
All right. Last week we asked you to tell us what's the best lesson in the market, or the market has taught you, and we had lots of awesome responses, didn't we?
And we had a lot of fun reading them too.
Dale says to me, pick one. I'm thinking, how am I going to pick one out of this? Because a lot of them were so different and so great. I really enjoyed reading them, so thank you for that. I'm sure other people enjoyed reading this as well.
It's like watching you pick out your favourite chocolate out of a box of favourites.
So this was just under our recording, wasn't it, from last week?
Yep, correct.
On the YouTube channel. So this one's from Andrew. Andrew, we picked you. The best lesson I learnt in the market was to stick to your trading plan. I thought that was just really perfect. Emotional reactions always prove to reduce your gains and getting out too early on a win and get burnt by not getting in on a solid signal. So the FOMO that Dale always talks about. So always follow your plan. So I really love that. What did you think of that?
Look, I did too, and I like when you do research or you see studies by institutions, you know, like universities on traders. That's the biggest thing that traders do is not follow their plan. But they say if I'd followed my plan, I would have made money. But I don't follow the plan.
But is that more people who are just starting out and
No. It's just that they don't. They talk about traders who have been trading for a while. So a lot of these university studies I've read, and looking at that trader psychology or heuristics, behavioural finance, those sorts of areas, and looking at those and thinking, well, why aren't you sticking to your trading plan? You know, if you've got one and it works, just stick to it. It just
And what did the answer come up with?
I think it's just men with their egos.
Right.
No, probably not. But it's just it's
maybe it was right the first time.
Maybe I was right the first time. But it is us guys. We think, oh, we can adjust it. We can do better. We can beat the market, and we have
but you
that.
can adjust it as you're
Yeah,
trading.
you can.
It just depends on how the stock unfolds and how you analyse shares and what strategies you've come up with as you've been doing your testing.
Correct. And I think when I ask people, when I have people on the phone and I'm chatting with people about not sticking to their plan, I generally say, well, you don't trust your rules or you don't trust yourself. Which one is it?
Yeah.
Or is it both? And generally it's I don't trust myself, but quite often it's I don't trust my rules. And so even though they've got a trading plan with rules, then they haven't tried them enough. And this is where we always talk about, know the personality of the stock, know your rules, know your strategy, and backtest it. And so, the biggest thing that we teach our traders is to backtest and backtest and backtest ad nauseum. Because it's like driving a car. I know Janine doesn't think about driving a car anymore, she just does it. And sometimes that's a bit scary. But you haven't been in a car with Janine, guys. But that's what it is. You don't think about driving a car, but when you first started driving a car, you had to think a lot about it. And this is where how a lot of people trade. They have to think a lot about their trading rather than having that knowing. And that's that getting into that stage of learning where you just know. And that's really where the traders like Janine and I are. We just know what we think, and we can look at a chart pretty quickly and go, yeah. And we can get it right with a high probability. But when you don't trust your rules, you're always changing them and second guessing them and then breaking them a little bit or bending them a little bit, and that's when you fail. So I think that was why I loved that one. It was just brilliant.
Now, when we had workshops, we used to take it back to the really bare bones simple and show people charts and then get them to tell us whether they think it's going up, down or sideways.
Yes.
So if you think about the gold stocks that you saw on the charts tonight, which of the gold stocks that we talked about do you think is the best? So just have a think about that. Go back and watch the recording, have a look at the charts, but don't do it for any length. Just watch it as it's played, and then at the end of it, just make up your mind and say it's this one out of those ones. Yeah.
Yeah.
So get typing below after the show, and then let us know what your opinion is.
Well, I think I'd like to know why they're thinking it too.
Would you?
Yeah, just like, hey, why did you pick it?
Oh, okay.
Like, why did you pick it? So don't take...
Because sometimes it's just that intuitive thing.
It is.
And we find that some people, before they've even learnt how to trade, they just have that intuitive side to them where they can look at a chart and then they can see what's going to happen.
Correct. So let's get your fingers on the keyboard and start typing so that we can get some of your responses.
All right. Unfortunately, we've come to the end of tonight's show. Was that a big sigh?
I am. I'm a bit sad. I was just getting into it.
We hope you've enjoyed the discussion tonight, and thank you for participating. And remember, your questions are important, so don't let them go unanswered. Also, if you have a topic that you'd like us to discuss, send in your ideas and we'll look at your requests for our upcoming shows.
Yeah, remember to hit that subscribe button and like the video, and also remember to share the video on tonight's show with your social media, with your friends and colleagues, so they can be informed on you helping them. And as the participation grows, we can deliver you more and more interesting topics. So, but remember to put the show onto your calendar, as we'll be back here right on YouTube live every Tuesday, 7 to 8 p.m.
Now, if you'd like to have your question answered on the show, either send your question in an email, and remember, and they've done it to me again with the teleprompter. There's no words on there, guys. Remember, video questions have priority. So I've got someone yelling in my ear. I always love that. By emailing info@wealthwithin.com.au and type Wealth Within Live in the subject line. You must do this before 3 p.m. Tuesdays to get into that night's show.
Well, thanks, guys. We really hope you enjoyed the show tonight as much as we have bringing it to you. And as always, thanks for joining us, and we hope to see you again next week. But for now, goodbye, good luck, and good trading.